Hello and welcome back to the Infinite Fire podcast, where we focus on achieving financial independence through the practice of infinite banking. You're here with Mr. Legacy, and today our topic is going to be how old do you have to be in order to start your own bank? Let's go. So I love having this question. I have a lot of people that come to me, people that want to learn. They're like, you do this infinite banking thing. What is this thing? And how old do you have to be in order to start a bank? Right. So I like this question. And I like this question because if you know anything about infinite banking, which just a quick overview, infinite banking is the practice of using your whole life insurance policies as your own pseudo bank account, so that instead of paying your interest to a bank or a finance company, you're actually paying it back to yourself. And as it grows, your cash value grows and the death benefit of your policy grows, right? So the more you use it, the more you gain and the more you can leave your heirs in the future. So, as we're talking about that, people are always like, "Okay, how old do you have to be in order to start one?" Well, how it works with, like I said, with whole life being the backbone, the foundation of a policy, it you only have to be what a minimum of 30 days old. Why is this? It usually takes about that amount of time. Probably now, with COVID going on, it might take a little bit longer, but it's usually about 30 days to 2 months until, let's say, a newborn gets their social security number. Once that newborn gets their social security number, you are able to go out and get a policy on that child. Inevitably, the next question is usually, why would I want to do that? Right. And a lot of people and a lot of families, a lot of wealthy families, upper middle class and above, they figured out this one universal truth. The younger you are and the better health you're in, the the more insurance you can get and the less it costs. I mean, that's one of the biggest things. The better your health is and the younger you are when you initiate that policy, the cheaper it's going to be, and that price is locked in for the life of that person. So imagine you're paying the same thing you've been paying since you were 1 years old, 2 years old, 30 days old. You're 40 years old and you're still paying the price as if you were 30 days old. That is the benefit of getting a policy on someone so young. So many grandparents, a lot of people I work with and my colleagues and the people I talk to, that is what they do. They get these policies. They have clients that get these policies as soon as, they love having grandkids and great grandkids and things like that, because as soon as they find out that they're having them, they're talking to the insurance person like, hey, we have a new person coming up. And as soon as they come out of the womb, it feels like that child has a policy. And a lot of people underestimate how important that really is. And the way we set them up, we want you to grow the cash value over your lifetime, right? That is the point of us setting it up the way that we set it up. So look, they have a cash value. The way we set them up, they have a cash value year one. Okay. So let's say your child is, I said, under one, but let's say 16 years from now, what happens? What's going to happen? They're going to want a car, right? They want a car. So you've been paying on this policy, which is growing, by the way, the cash value and the death benefit. It's growing and growing and growing over the last 16 years. And now that child wants a car. Instead of you as a parent, you're freaking out. You're like, I don't know. We can't afford it, this and that. They can just take the money from the policy. Here you go. There's a car, right? And then when they get that, that teenage job, or you're teaching them about responsibility and money, what do you say? Hey, you're gonna have to pay me back so much per month. So guess what you're doing? You're just taking that money, putting it right back in the policy, right back in the policy. No stress, no worries. Just keep up with your premium, right? Keep up with your premium, right? What else is going to happen? Somebody's probably going to want to start a business, go to college, go to trade school, buy a house, get married. All these things, right, usually require some upfront investment. Even when you're going to school, books, right? Place to stay, laptop, um, decking out a dorm room, food for the dorm room, transportation, anything you can think of. All these things require upfront investment. You're getting married. Guess what? Caterer wants a deposit. The venue wants a deposit. Um, the people that are doing um, the outfits that you're wearing want a deposit. All these people need to get paid up front. Guess what? Grandson, granddaughter, don't stress about that. You know what we're going to do? We're going to give you this money right here that I just pulled out of that policy. And then now, guess what? No stress. You're not stressed out about it. Not stressed out about it at all. They're not stressed out about it. Now they can go with the planning of their wedding, right? Focusing on their studies, right? They're not burdened with those student loans years afterwards, right? They're not burdened with those student loans. Why? You paid for it already. And rather than having to worry about paying it over 4 or 5 years, you paid for it over 18 years in payments, easily digestible payments for you over that time period, right? So you've been able to alleviate stress from yourself and from them. And then after they've been married a while, you know what you say? Guess what? I have another gift for you. You know what that is? I've been paying on this policy for you since you were a child. Here's the gift. Now, again, once you transfer the ownership of that policy to that person, guess what's going to happen now? They're going to be paying the same amount that they were paying when they're 30 days old, when they're underneath 1 years old. Instead of them saying, like, okay, I'm 30 now, I'm 40 now, I want to talk about life insurance now. Hey, we took care of that before you can even walk, before you can even talk. Like I said, that amount of money is growing. So, on the flip side, what is important for parents to know um, when they're talking about getting policies on their children? Number one, if you're setting it up specifically for infinite banking, make sure you're talking to somebody that knows what they're doing, that knows how to set up a policy for infinite banking. That's number one, right? And used a whole life product. I know a lot of people push index universal life products, which are fine for other uses. But with infinite banking, what we want you to do is we want you to be able to have guarantees in life. I want you to know year by year what your cash value is going to be. I want you to know year by year what your death benefit is going to be, and it's going to be guaranteed. That's what I want for you. I don't want a universal life policy or index policy that it has a beautiful illustration, but none of it's guaranteed. Why? Because it's tied to the stock market that could go up or could go down. But when we're trying to set a strong foundation, a strong financial foundation, what we want is guaranteed. We want something consistent and constant. And that's what that whole life policy um, allows us to have. And next, I want parents to remember, and whoever's buying that policy, remember that the child, the minor, is going to only get up to half of whatever your current life insurance is worth, right? Your combined life insurance is worth. So you can't be worth 20,000. You have a life insurance policy worth 20,000, then want to get 100,000 on your children. You can't do that, right? So if you only have 20 on you combined, they can only get 10,000. So if you have a million, your minor that you're getting this policy on can get up to a half a million. And I want that to sink in. Your child, before they've taken their first steps, said their first words, are worth $500,000. And you have the opportunity to capture that at the best possible moment. And that moment is when they're young, they're just babies. They haven't lived life. They haven't had the opportunity to break bones, to get asthma, to get sick, to get any of these things. They haven't had the opportunity to have this long medical history, um, that's that um, that underwriters take into consideration, right? They don't have that yet. So it's the best time for them to get it. It's going to be the cheapest. They don't have that medical history. It should be a quick process. It usually is. Very quick process. So you can lock in $500,000 for them before they're one. As I told you, as the cash value grows, their coverage is going to grow as well. So by the time they're 25, it's not unheard of for their policy to be worth 750,000 or $1 million. It's not unheard of. That all depends on how you set it up, but it can happen. It can happen. It all depends on how you set this up. But with parents, I'll tell you, get a strong policy on yourself first. It will make it easier for your kids. Get a strong policy on yourself first. Get the highest amount of death benefit you can get. So then when you're putting them on your kids, they can get the highest possible amount. So if you're covered for 2 million, now your kids are covered for 2 million. And let's just for an example, let's say you can cover that child that's not even 1 years old yet for $1 million at a rate of, let's say, again, just for an example, $100 a month. And that's whole life. So again, that number is locked in for their entire life. That is what this is all about. Now you're not only covering your current generation that you're taking care of, but you're actually covering the generation that comes after, your children. So you're building up an inheritance for your children's children, and that's a beautiful thing. That is definitely a beautiful thing. But thank you for tuning in. This is Mr. Legacy again with the Infinite Fire podcast. I appreciate you tuning in. I can't wait to speak to you again. Have a great day.